Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, new week and picking up basically where we left off. We're down about 0.8%, trading down around 38.58. The bears continue to do their job. I mean, you can see the candle from Friday. It closed at or near the highs, but they came right back in. Globex opened it right underneath 3,900 and have done basically nothing since except, take it down a little bit. The low, Globex low is 38.46. They've come up off of that. But as we go to the hourly chart, you can see it's still a slight consolidation phase. So we're in the next little consolidation. The last one, Wednesday, Thursday of last week, the bears won that one. Now you can see we could hover in and around this 3,900 area for a couple of days. You got a Fed meeting. You got an interest rate announcement Wednesday at 2 o'clock. So I don't really envision a whole truckload of big decisions being made between now and Wednesday at 2 o'clock. I think there'll be some volatility. I think there'll be opportunity to take, a decent amount of trades to hit our numbers. It was a great week in the room last week. I don't expect anything less this week, but I do think you're going to have two markets. You're going to have the market before Wednesday at 2 and the market after. I think the market before Wednesday at 2 is going to be pretty close to the vest. Then after Wednesday at 2, as a few more unknowns become known, the market will make some more decisions about what it wants to be directionally for the fall. I'll be very curious to see where we close Friday relative to the weekly pivot and relative to 3,800. Do we dip back into the 37s? Does that get rejected? Or do we start to start to build back this move into Tuesday of last week where, we traded as high as 41.75? I think it's a very two-sided market. I think it's going to stay a very two-sided market. Everybody's going to have their moments, bulls, bears. But overall, back to that daily chart, overall, directionally, the bears are in control. You've got a series of lower highs, and you have the lower lows to go with them. Can they get back to the yearly lows? I don't know. That has a lot to do with a lot of factors that are not known yet, and reaction to price and things like that. People that are, guessing and putting up old charts and trying to predict that the old charts are going to be the new charts and all this stuff. It makes for great Twitter. But, when the peaks on those charts are overshooting trades by 30, 40, 60, 80 handles, it doesn't make for great trading. And if we're not talking about trading, I don't really know what the hell we're talking about. Things have to be actionable and they have to be risk reasonable, or it's just a really cute picture that's going to get people nuked. So worry about the 10 handles in front of you. The rest will take care of itself. Respect risk and you'll be fine. And the moments the market wants to go up, you got to be long. The moments the market wants to go down, you got to be there short. And when one stops working or the other stops working, you have to respect that, not try to jam an ideology inside of it, and adjust. So you can see right here, 4 really nice days of upside if you took advantage of it. If you sat around and bitched and moaned about why is it going up when it's supposed to be doing A, B, C, D, well, then you didn't take advantage of it. And then another 3-4 sessions going on 5 of the market, rejecting lower highs and coming in and making lower lows, which makes, some really comfortable shorts during the course of the day. Unless you're being stubborn and saying, well, why aren't we going up? This should be this, this should be that. It doesn't have to be anything. Just let it be whatever it wants to be. And the whole time, keep your risk tight, take your profits, let your runners work. That's all we do. That's all we do. It's not complicated. Our brains make it complicated, and all the noise from all around makes it complicated. It doesn't have to be complicated. So where are the numbers today? You got volume weighted average price up 38.68, 69 basically. Our proprietary moving average is down at 55. The hourly mid band is up at 75, and I would not be surprised today with everything going on. It's going to be pretty whippy. It's going to be pretty choppy off of the open. I wouldn't be surprised if we made a run at that hourly mid band. I'll be curious if during the course of the week, if we make a run at that weekly pivot, if Wednesday at 2 o'clock provides enough fuel to do that. What I would say to the bulls is, if you're going to make that run, you better convert it. You fail up there, you got a lot of problems. I've been saying the same thing to the bears for a decade. If you're going to go down and test weekly pivot, that better not be all you have. And time again, what we've seen in buy dips markets is that was all they have. Well, we are definitely in a sell rallies market now. So if the whole point of this is to go up and test weekly pivot at some point this week and it can't get through, that's a very nice short. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow.